Good morning, ladies and gentlemen. I'm today's MC, Yu Tongsun.
I am Yu Mengsun.
So welcome to the second day of MIT Chief Annual Conference. Please allow me to introduce our first guest speaker today, Mr. Eric Gan, Executive Vice President of SoftBank Group.
Mr. Gan is the founder of eAccess, a mobile telecommunications company in Japan. He is currently the Executive Vice President of SoftBank. He has led SoftBank's pivot to overseas markets, especially in China and in India, putting him at the forefront of Japanese companies expanding to new consumers.
Prior to eAccess, Mr. Gan was a telecom analyst and managing director for Goldman Sachs Japan, where he was involved in advising telecommunications financing projects in Japan and Asia.
Now let's welcome Mr. Gan to give us the first speech today. Welcome.
Okay. What? Do you use this or do you have this?
Sorry?
I use this one.
Yeah, I think so. Okay. Yeah. Does it work?
Is that working? Okay. I can press
sorry.
it.
Okay.
Does it work?
Yeah.
Good morning. Thank you for the introduction. My name is Eric Gan. You can tell by the name, I live in Japan, but I'm not Japanese. I was born in Hong Kong, was brought up in the UK, and now live in Japan for 26 years. I know it's Sunday morning. I'm quite surprised, still a pretty big crowd, actually. Normally, people want to stay longer in bed on Sunday. So I can talk about anything you want, actually. I have a presentation, just talk about two things, two parts, actually. One is talking about my venture startup in Japan, and also I'll talk a little bit about what I'm doing right now at SoftBank. So first of all, the part one is about the story of my venture. I was born in Hong Kong, and I went to London at the age of 15, went to boarding school, went to study there, and then I came to Japan in 1990. So when I first arrived, was my first job in London, when I first graduated from my university, I got a job in London to work in the stock market. I was a financial analyst. But actually, when I started my work as a financial analyst, was actually the most difficult time of Japan. Actually, you can see that the Nikkei actually peaked in 1989. Is a peak at 38,000. We never went back there, actually. Today, Nikkei is still 16,000, so it's still half compared to the level of the peak of the bubble. Because at that time, we have the real estate bubble in Japan, and that burst, actually. So after doing some analysis of the Japanese stock market in London, I decided to move my location to Japan in 1990, it's 26 years ago. So I started in the most exciting sector. At that time, was actually very boring. It's only two companies there, NTT and KDD. One looking at doing business in domestic, one doing in international. So I was looking at the sector. I was looking at the deregulation, because when you have deregulation, it creates opportunities. It creates startup. It creates a lot of new companies. So when I look at the mobile deregulation back in 1994, Japan at that time, the mobile penetration was only 1%. But with the deregulation, at that time, actually, the Japanese, a lot of other analysts would like to tell me that, no, Japanese culture would never allow mobile phone, but we know it's wrong now, because they don't like to talk in front of people. They have more public pay phone. But my analysis was very simple. It's such a convenient product when you actually lower the price, and actually when you have the handset available. At that time, they would still have to rent the handset. When you have the handset so cheap, people can buy it and own the handset, the market would take off. So actually, I was very fortunate. I was working for Goldman for many years in the telecom sector, and I have the opportunity to actually to be involved in the largest IPO in the world at that time in 1998, which is we did a $18 billion IPO. I set that record for 10 years, except a few years ago, Alibaba actually, the IPO beat the record. So I actually did also fundraising for NTT, the fourth tranche, the fifth tranche. I did Smarter in Hong Kong, I did Singtel, China Mobile. So I did a lot of telco IPO. So through all these IPO, actually, I learned how to speak to a lot of the financial investor in Wall Street, Tiger Fund, Teton, Fidelity, all these fund managers. But in 1999, actually, after I took Docomo public and did a few other tranches of NTT, I saw the dot-com bubble. And it was actually crazy at that time that a lot of even Docomo, I took it public with the EBITDA multiple about 7 times. It went to 40 times. And people think that's normal. And people talk about that we should not measure cash flow. We should measure on eyeball, dollar per eyeball. And a lot of buy-side analysts, everybody was just saying, no, we love company making losses because that's how internet works. But we all know it's not true. So end of 99, after I have been doing a lot of just IPO, just taking company publics, I decided actually to start my own company and actually bring it to IPO and tell my own story. So 99, November, I started the company, eAccess, which is 16 years ago. That's how actually I got some old pictures. I couldn't even afford a door. That's an aluminum door, actually. And I have 2 tables, and I hire 15 people. And that's how venture starts, in a garage, with no doors. And so I started the venture. You can look at the date is end of 99. The bubble burst, March 2000. So I started my venture at the most difficult time, and when I need money, and also it's in telecom, which you need money to build infrastructure. It's not a website, it's not marketplace. It's actually you need money to build the infrastructure. And I actually when I go out to raise money, we have the 911 in the US, and that everything actually stops. At the same time, also you have this company, my competitors, SoftBank actually, started launching a very aggressive ADSL product through the brand name Yahoo BB, which is a group company under SoftBank. So I actually got a call from my Goldman boss. He said, Eric, we still have the office for you. You're welcome to come back. I just look outside my office. I have close to 150 people working for me already. I said, you must be kidding. So you hang up the phone. And very lucky, I know that by that time that when you start a company, it's not like a startup you can just suddenly shut the door and disappear. People, when they come to work for you, they trust you as a boss, as the owner of the business. And I know that it's very difficult to just go IPO with just a story, with just an equity story. So when we actually raised the money after 911, actually we raised $100 million, 921 actually, September 21st, 2011. When I talked to the team, I said, look, I think we have to go IPO. We have to turn profit very quickly and become the shortest history company, go to the public equity market. Because I thought that's my strength. I know when I get private equity, it's very difficult. You have to talk to venture capital. They're telling you this and that. But when I go to public equity market, that's my strength because I know a lot of investors in the public equity market. So we turned profit in the second year. And then we went to IPO in 2003. So this is actually, if you go back to even today, this is the shortest corporate history ever listed on the Tokyo Stock Exchange. And after the IPO, the story goes on. Then the public equity investor will ask you, at the beginning the business is only focusing on fixed line broadband using ADSL. And people want to see more growth, much bigger company because now we're a publicly listed company, so we have an obligation to grow the company. So we started a subsidiary because we saw the opportunities in mobile deregulation. We started eMobile in 2005. And we actually managed, because we're a public company, we raised a lot of cash. We managed to hire some pretty girls to be our character, to do some advertising. But one thing I really enjoy actually is we didn't actually go out and buy a company and just turn it around. We actually, I learned so much about building the network from scratch. How to do network planning, cell planning, optimization, construction. At the same time, also look at, building the retail network with their own brand. And you can see starting from, also the company is getting bigger and bigger. So we have to actually have a much better HR system, call center to look after the customer. Then after we finish building the network, we have a very difficult time again that we have the Lehman shock in 2008. At the same time, we have the tsunami in 311, actually, March 11. So when eMobile tried to raise money, it's similar like eAccess, was extremely difficult time. After the Lehman shock, no one actually would like to pay any money to support not a startup, but any company who try to fight with the company. I remember actually one of my shareholders came to me and said, Eric, why do you pick a fight with some smaller company? Why do you want to pick a fight with Docomo, KDDI, and SoftBank? And you add them together, they're more than like $500 billion company. Can you pick a smaller fight with some other smaller guy? But my belief is, if we actually have a good team, and the telecom market is very big, it's $100 billion. So even build a network, 1/10 of the cost or even cheaper, I think we can get our fair share of the market share. So we actually focus on building the first LTE network in Japan, also one of the very first in the world. This is actually back in 2011, so 2010 actually, we planned it. So now LTE is everywhere, not in the US maybe, but before actually LTE, when we built it, people thought, why do you want to build this network? Who's going to use it? Why do you need so much bandwidth? But we look at the future. We look at Docomo, AU, SoftBank. They are competitors. I've been competing with SoftBank for 12 years and now merged with SoftBank after 3 years ago. So we look at that. We have to look something ahead of competition, something they're not doing. They were just focusing on the third generation network, on HSDPA, but we think, no, the future is about LTE. So we actually went out and built the nationwide LTE network. And then I got a call, actually, thanks to Steve Jobs, after Apple launched iPhone 5. The biggest features of iPhone 5, probably you don't remember, is LTE. Then the SoftBank founder, which is Mr. Song, we call him Masa from outside. So Masa called me and said, Eric, can we have dinner? I said, well, we're competitors, so why do you want to have dinner? I said, oh, come on, just one dinner. So and it was a Friday, I remember. So it was 2 on a Friday, and after dinner, I said, what do you want, actually? He said, you have a network. We need it. We need it for our iPhone. And this is how, maybe we have media here, actually. He took out a piece of paper, which is signed already, and then there's no price on it. He said, go back and talk to your board and fill the price and send it back. It's committed. It's an M&A. And I said, we're a listed company. We can just not do this deal over the dinner table. We have to go and talk to the board of directors. We have the process. I said, oh, okay, it's Friday, I understand. Let's do it over the weekend and announce on Monday. And this is a $4 billion transaction, which we built a company from scratch. 12-year hard work, have 2,000 employees working for the company. We have about 6 million customers, about $600 million EBITDA, $3 billion revenues. We cannot just do it over the table. But I can see a lot of the synergy by merging the number 4 carrier, which eMobile was, and also with SoftBank to create a very strong number 3 or number 2. So we actually finished the deal not 3 days, but a week, a $4 billion transaction, and did a merger with SoftBank in 2013. Why do I want to talk about this? I'm not bragging about what I have done. I just want to let you know that from this whole experience, I've learned not only about financials, which I came from Goldman, I worked as a financial analyst, but after I have done the IPOs, a lot of the financial analysis over public equity, when you go to venture capital and private equity, it's so different. But not only that, actually, after we went public, I've done project finance, I've done IPO, I've done convertible bond, I've done straight bond, I've done hostile M&A, and also being M&A, and also delisted the companies. I've done the full textbook of all the CFA, all the financial analysis and handbook you have seen. But not only on the financial side, also if you look on the right-hand side, I've also have done startup. I know how to start a company from 2 people to 15 to 2,000, to build the organization, write the business plan, build the HR system, technology, regulation, customer support. So these are the experience you will never learn until you start doing it. So when I look at a lot of projects that MIT was yesterday was showing, I think it's very different to build a project compared to build a company. So I think this is actually the first part of the story I have is don't try to build a project or build a product, build a company that lasts forever, lasts 50, 100 years. And that's important than just looking at a very successful product and try to attract just short-term venture capital money. I'll just talk a little bit about what I'm doing right now today. The venture still continue. People just say, hey, you merged a $4 billion company, why are you still working? I still need something to do. I took some holiday, actually I took a day off, and my wife asked me to pick up the laundry, to pick up the kids, to go to the supermarket. It was crazy, actually. I decided to actually go back to work, which is better. So then I look at SoftBank, actually. Let's give you an introduction to SoftBank. SoftBank actually was my competitors for 12 years. We compete on broadband, fixed line, mobile, and we have a lot of telecom assets. Last year, actually, we decided to merge all these assets. The one on the left is Y-Mobile, because after we merged E-Mobile with SoftBank, Masa said, hey, can we change the alphabet from E, which could be Eric, to Y? I said, hey, you pay $4 billion, you can do whatever you want. $4 billion to change the alphabet is okay. So we actually merged all the telecom assets last year because SoftBank is very good at buying a lot of company, but not put them together. So last year, actually, we merged the 4 telecom assets and create in Japan a $30 billion company, 3 trillion yen revenue company with 17,000 employees in Japan. And with the merger of Y-Mobile and SoftBank, we have about 43 million subscribers. And very fortunate that we still have the 2 brand name is still going on. So if you go to Japan, you can see SoftBank brand and the Y-Mobile brand. It used to be Y-Mobile, used to be E-Mobile. And even the consumer will never know, actually, when you go to the shops, the Y-Mobile shops and E-Mobile, and also the SoftBank shop, they're very different. And today, I'm very happy, even after 3 years the merger, Y-Mobile still dominate the market. And in terms of every month, the growth addition is more than 50 to 60%, which is bigger than Docomo, AU, KDDI, and SoftBank add together, the 3 incumbents, which is actually still pretty successful. So now we realize $4 billion was a cheap deal then. And we still have the retail outlet, and also that SoftBank has a pretty big enterprise sales team with the #1 Google Apps reseller. We have many offices. This is only Japan, actually. If you count a group company, we have even more offices. So if you look at the group, this is just so far it's about the telecom asset in Japan. If you look at the group in SoftBank, we have about 1,500 companies inside SoftBank. When actually 2 years ago, when Masa asked me, hey, Eric, you have been working for Goldman before, a lot of experience in financial. Why don't you help me to manage the portfolio? I said, without thinking, I said, oh, that sounds fun. Yeah, let's do it. And when I opened up the portfolio, say 1,500 companies, if I report one company, it would take me 5 years. And that's when we're still buying also. And it was crazy, actually. But the company is big. We have investment in, of course, now in Cambridge, in the UK, Arm we just bought, and we have pretty big asset in China, Alibaba Group. We have Yahoo Japan. We have Sprint in the US. And recently, I just put a few more logos, actually. We have some startup. We can look at, Series A, even angel round, and also fintech. So we have a lot of companies. So last year, when I started, after the merger, I started my group in business development, which I decided not to look at everything in the world to do this portfolio company. I want to look at actually new business for SoftBank Japan. Within 6 months, actually, we look at our team, actually only 10 people, look at 150 projects or proposals. And they're ranging from healthcare, IoT, robots, energy, everything. And I just realized that there's no way I can understand all these very exciting venture startups. So I decided to do something that I have an interest. It's not related to telecom yet, but it will be combining with the telecom business in the later. So I look at 3 areas now. Will be just the top, actually: security, cybersecurity, cloud computing, and also fintech, financials. And it doesn't mean that if you have any ideas about contents or healthcare, you can still come to me. I can actually send the proposal to the business group, because we have SB Robotics, SB Energy, and we're working closely. But I decided my group should focus on 3 areas that we think we can do a good job. So what's our ecosystem? Unlike I know there are a lot of VC here, they're going to hate me, but the VC, actually, the ecosystem is you invest, and you look for good ideas, you screen the ideas, you search an entrepreneur, you grow the company, and you need exit, either IPO or M&A. And that's not the idea of building a company. That's a project. But unless the company go bigger after IPO. But the business model that I'm trying to build inside the SoftBank Business Development Group, the ecosystem, is we have our own vision that what we want to look at in the next 5 to 10 years. So we develop the vision and the strategy, look for the technology, we invest. Also, we help them, we incubate. We actually work with a lot of the entrepreneurs. We build a business plan. And actually, we bring it them to, if they're overseas company, expand them in Japan or China and overseas, and then we go on. We try to combine them with the synergy. So there's a template. I normally ask all regardless of size, whether they're angel round, startup round, final round, I ask for the same template. Just very standard. You can see in any, I've done it 16 years ago for eAccess. And took it public. So anybody who wants to do startup, this is a template. You have to talk about your company. And I like to look at the background, because it's all about investing in people. So I like to see the pictures of the people. I like to understand what do they like, what is it, their hobbies, regulation, if there are any, and also which market segment you're going for. Have you done your research on who are your competitors, your strength, what market share are you going to get? This is a more difficult one, the go-to-market strategy. How are you going to sell your product, including marketing? What's your HR strategy? And then financial modeling. I like the entrepreneur to start looking at the Excel and understand what financial market really wants and how you fund it. The capital requirement, can you borrow money? Can you leverage? What are the risks? What's the maximum debt? What's the full funding requirement for the whole thing, for the whole become the fully funded business plan? And I'd like to see also risk analysis. It's not that difficult. It's very simple, actually. So when we take this template, my team will actually go back and do some internal benchmarking. So we actually look at the SB Synergy. If we actually go and invest in this company with SoftBank Synergy, because it's a big group, what we can see, can we give some help on hiring? Can we actually help them to expand, go to market? And then how can we actually reduce the risk and do our own valuation using the template from the entrepreneur and with the SoftBank Synergy, and came up with our own valuation methodology. So this is actually what we do right now today. As I said, we actually look at 150 projects. We actually only invested in 6 projects. It's harder than maybe acceptance rate of MIT, but we look at a lot of things. But if they're not ready, it's just going to take more time to actually do the internal evaluation. So that's the team actually we have. It's not a big team, but you can see it looks like they're all Japanese. They're not actually. We have more than 10 countries. We speak 12 different languages, from French to West African, German, Korean, Chinese, of course, Cantonese, English, Japanese. So we can look at any types of ventures in the world. So we welcome your ideas. Thank you.
Thank you so much.
Do you want the time for Q&A or do you have?
Yes,
Okay.
now is the Q&A time.
Sorry, it took too long. Actually, I was hoping to have more time for Q&A, not M&A.
There's a mic on the aisle, so you can use it.
I can hear it. Yeah.
Dinner with the CEO of SoftBank, kind of $4 billion dinner. So I wondered, how do you, so will you keep home, how do you price your company? How do you,
Okay, that's a good one. Actually, because we're a public equity company, not private equity, so the price is already trading every day in the stock market. And of course, we understand that with the potential, we can do a lot better with the LTE network. So in order to find out what's the right price, actually, we go and talk to another telcos, whether they're interested, and which I wouldn't say which company, but they came up with even higher price. Even higher price. This is actually, I never talked in public. So when I went to the board meeting, we have one offer from SoftBank. We have another bigger offer, higher offer from SoftBank competitors. It's a good position to have, actually. So what do you choose? So actually, we went to see that company, which we know them, but we don't know them well enough. And I don't know what sort of questions should be asking to get the right feeling, whether we should do the M&A. And so I asked the CEO 3 questions. I said, it's very simple. Why do you want to buy our company? The answer was pretty bad. He said, I've heard that my competitor is buying you, so I don't want you to be acquired by them, so I want to buy you. I said, that doesn't make sense to me. It's like, I want to marry you, but I don't really want to marry you because I heard he's marrying you, but I'm going to marry you because I don't want you to marry him. I said, that doesn't make sense to me. So it's a bad answer. The second one, actually, I asked, what are you going to do with our employees? Because end of the day, it's not your company, because it's a lot of employees. And the employees are, they will be inside the organization, and if they want to go, they can go, which is no good. I want my employee to be fully guaranteed for several years. And then I said, what is the synergy? They said, well, we can actually do whatever you do, maybe just 2 years later, we can build the LTE network. We don't see a lot of synergy, but we just don't want to see the synergy on the other side, which is also bad. So I asked the same question with Masa. And now actually, he said, well, we actually look at your company. Why? Because it's not just the LTE network, it's the people. We like the people in your organization. We need help to fight a bigger war. And also right now we know we have Sprint, that they need a lot of bilingual engineers to help Sprint. And I said, what are you going to do with my people? They said, they come in, we need people. I said, a 3-year guarantee, done, 3 years. No one will be fired, everybody same salary, same rank. And then synergy is just uncalculatable. We're going to do many, many things together. So we didn't choose the price. We choose the synergy.
What's the plan with Sprint?
No, I'm not involved in Sprint. So I try to stick to what I'm involved. But Sprint is doing well. You can see the stock price actually this year. I'm just talking about something, $2 to now $7, and they're turning around.
Yeah, I'm from Telecom, formerly worked with Bell Labs, and now with a big company called Cogent Communications. I would suggest you buy us.
I'll tell the Sprint guy.
And I want to work with you on that. Okay.
Thank you.
Thank you.
My question is about trying to understand how SoftBank, the venture operation works, because it has lots of presence in different places of the world. For US startups, do you suggest US startups talk to SoftBank operation in US, in Japan, in China? Like, what would be the best office or presence for companies to talk to?
I'm sorry for the time limits. This is a
Last question.
Last question.
Yeah. Look, there are a few companies I just invested. which is 2 startups on the East Coast, actually. One in Boston, CyberReason is cybersecurity, and also Packet, which is Series A round, based in New York. They are cloud, bare metal cloud company. So we have, but one thing, my group actually, we need to look at the operation or startup that has an angle in Japan. If they're just doing something in the US, that's not my area. That would be SB Group or some other division. But if you want to actually come to my division, you have to have an angle in Japan. So that's what I'm doing. But it doesn't mean that, if you need to raise money from SoftBank Group International, we can introduce them to you also. Thank you. I think they're running out of time.
Thank you. Thank you for your speech and Ron for sharing. Thank you.